The stock market is crashing and everyone is selling. In this video, I discuss 4 reasons why I believe this is happening, what is causing all this mayhem, and finally, give you my thoughts on how I intend to take advantage of this market crash as an investment opportunity during this uncertain period. If you want to learn how to build wealth, hit the subscribe button and click the bell notification icon so you'll be notified every time I upload new content. Why is the stock market plummeting? During the beginning of August, the S&P 500 dropped around 3%, while the tech index dropped even more at 3.4%. It sounds all bad and is making investors panic. From what I can see, there are 4 reasons for this. Reason 1. Recession fears. There's been a fear of recession for over 12 months now. If there was an actual recession, the stock market would crash, as less money is being spent by consumers, unemployment rises, and company earnings are less than what they expect, which impacts stock prices. As you know, the stock market is a leading indicator. Any hint of a recession happening, it reacts badly to this news. Recently in the US, only 114,000 jobs were added in July, which was well below the expected 150,000, and unemployment rose to 4.3%. Spending is also slowing down, as reported by consumer-related companies such as McDonald's. However, I don't believe a recession will happen in the US until around 2026-2027, as the Fed still have time on their hands to implement changes to avoid it happening before then. Reason 2. Interest rates. The US Federal Reserve has hinted of a rate cut in interest rates during September, and then another one by the end of the year. That's also making people think that a recession is coming, as normally the Fed will preempt a recession by dropping interest rates before the recession happens to make the economy improve. Inflation has also come down, but it's still above target rate. This also, I believe, is going to have an effect on interest rates, as they won't be able to cut them nearly as much as they would like. Write boss in the comments section below if this content is making any sense. Reason 3. Tech stocks. So what else has caused the market to drop so much? Tech stocks. They've dropped on an average 20% since March. This has had an impact on the S&P 500 index, as those companies make up such a large proportion of that index. Wherever there is a major tech drop, like we've just seen, it will affect the index rather than some of the other companies who haven't dropped as much. Why are they dropping? Well, they've gone up an awful lot since October 23. Even in the beginning of this year, they were due to drop around March time. That didn't happen. So they are due a correction, but this will only be temporary. I foresee no recession until 2026, 2027. The bull market is still in play. Also, Warren Buffett cut his exposure to Apple by 50%. That spooked investors into cutting their exposure to tech stocks as well. Reason 4 is Japanese yen. Now, imagine that you discovered a really clever loophole. You borrow money from somebody with no interest and invest it. Meanwhile, the value of that currency drops. By the time you need to repay the loan, the money that you owe is worth less than you borrowed it. But your investment has grown. Well, that's what exactly a lot of traders and investors were doing with the Japanese yen. It's been falling in value. They've been able to borrow money against that and obtain easy money. However, this changed when the Bank of Japan decided to raise its main interest rates from nearly zero. All of a sudden, the value of the Japanese yen started to increase, which means everyone that was using this loophole just had to sell everything to cover their losses. This was called the yen carry trade. However, it was around $18 billion. That's like loose change to the markets. But that's the herd for you. Anyway, another opportunity to buy the dip. My thoughts. I'm not a financial advisor, and this is definitely not financial advice. This is purely what I intend to do during this uncertain period. I expected the S&P 500 index to correct from July into mid-September. The target around 4,800 to 5,000 points. However, this does not factor in what I buy on a day-to-day basis. So it is irrelevant to my decision making what the index does. However, it does give me a rough guide as to the overall direction of stocks. As I said, I expect this bull market to continue for up until about 2026, possibly 2027 if we're lucky. And whenever you buy any stocks, tech stocks these days, they are going to be higher in 12 months' time. We're still in the bull market. So what's the state of play for each individual stock? Well, let's start with the king of AI, NVIDIA, the best stock around. Rare for it to drop for an opportunity to buy. The MACD is oversold. However, there's a lot of support at $90. All-time high was $140. Anything around $100, I would snap up. And that's what I've been doing in August. Is buying anything under $100 for NVIDIA. Google, not a great year for the stock, but still has positive earnings. I think it will see all-time highs later this year, as the MACD is oversold as well. AMD dropped a lot since its all-time high of $227. Still a good AI stock. However, it could take 6 months, 7 months before we actually see any real progress with this stock. Microsoft, a company share price which is stable and not volatile, will be hard to gain shares in this company cheaply. Because of that, I think any temporary drop down in that share price would be worth snapping up. Meta, same as Microsoft, it's had a fantastic performance over the last 18 months. The risk for this stock is still to the upside. It's still producing great earnings. So we'll be very lucky if we can get any cheap shares out of them. Taiwan Semiconductors, excellent earnings again. Should mean any drop in the share price would be temporary. I've been looking to snap up whatever share drop I can get. Qualcomm, again another good semiconductor company, has dropped significantly from the all-time high of $230. Anything around $160, I'm buying. Tesla, high-risk AI stock. It did drop to around $140, I believe, this year. It's grown since then. However, because of its high risk, it could drop from where it is now, below $200. The future with the robotics AI division is still strong. More of a long-term play for that one. ASML stands out with strong earnings and direction of travel and trading well below its all-time high of $1,100. I'll just continue to accumulate into the stock. Anything under $800, I'll snap it all up. And that's my market update for the month. Hit subscribe and click the bell notification so you'll be notified every time I upload my market update.